the reaction, something like Target, which also sold off. Everything that had a good year going, kind of coming into numbers, has been selling off. The good ones have been bouncing back as people just kind of adjust to it. So you're seeing just, it's the anti-semi sentiment in everything consumer. But some of them are just kind of too cheap to ignore completely. It doesn't mean you have to get long them, but you should pay attention when the Abercrombie start to turn. They're a good company. They're a good company that, to trade at these kind of multiples, you would expect them to be a little bit of a shambling disaster, and they're just not. China was strong for them. That's another good indicator for Lulu in a couple next week. Victoria's Secrets is way off its highs. You got a lot of names in the mall that have just been absolutely tortured, and so it looks pretty good. And it's really hard to come up with any of these retailers that's come out and said, you know what, the consumer's absolutely sucked. I realize what they're supposed to do. I realize what sentiment has been. I realize gas prices are high. People are still going shopping. So I kind of, if you're going to give me a choice of who I'm going to listen to, I'm probably going to listen to the stores who tell me that consumers are still going out shopping and spending money. Maybe they are a little more price aware, but that's just a nuance. People don't shop when they actually feel super poor and they hate everything. So this whole, it's not like, I'm going to go spend some money. I'm pretty sure the world's collapsing. I'm going to be jobless tomorrow. Let's go to the mall. It's too much is maybe made of store traffic at the tops, but at the bottoms, it's a pretty good tell. The three of us have enough gray hair, including you, Ben. Sorry, man. Life goes on. You get old. But we've seen bad times in the mall. Plenty of parking, lots of sales, and that's not what they look like. At least not around here, and not to the limited number of places I've traveled. But it just seems like a consumer that's kind of slugging along and doing fine. If gas prices, even if in a scenario where they stay higher longer, I always use gas prices as a proxy, but obviously that affects the entire supply chain margin of any of these retailers, from shipping to sales in the Middle East and everywhere else. But the overall, they've kind of handled the blow, and so I'm kind of bullish on the consumer space right now. I mean, I think they look pretty good. I think Target's set a nice base and moving higher. I think there's a lot of low hanging fruit, and there's just good multiples. So why not?
Target's a good example, actually. Jeff, you came on my podcast in early December, and we were talking about Target, and you're the guy who we love to talk to Target about, but like, $85, $84, it was like so left for dead. Well, I don't think the consumer is massively better than it was back then, and the stock's up 50%, right? So I think to your point, in Robert being involved in some of these bottomed out stock, like consumer stocks, those are names that you can get involved with here because nobody wants that stuff at all. They want Micron, which
No.
goes up in a goddamn day, and all this stuff where anything that's tied to GDP, tied to the middle consumer, seems to be tied to rates. Rates might have just bottomed out, or bonds, I should say. Like rates could go lower. That's going to help the consumer. Oil going down can help the consumer. And there's no positioning there, right?
Right, and these things get cheap, and really, what you're looking for then is less of a macro call than is management just out of their minds? Are they just going to destroy capital? Are they lighting money on fire? That's why I brought up Lulu before. They went from a proxy fight with a founder who kept telling them to stop doing stupid things. Basically, I mean, it's Chip Wilson's a controversial guy at Lulu, but he made really solid, kind of reasonable points that we need people that are more aggressive in terms of who this company is and what we want to be. That makes sense. Lulu fought them as hard as he could for ages, and then they finally kind of conceded. That's a sign of life. Target, they had so much low hanging fruit, and just in terms of reorganizing the stores, they've done that immediately. I saw a downgrade a couple of weeks ago where they said, "Oh, they've taken out the low hanging fruit." It's like, you know what? Management doing the smart things that they can do first and fast, and it changes the store experience immediately, is not a negative. Like, that's not a bearish thesis. Oh, all they did was improve the store experience right away. Uh, that sucks. What an idiot. I mean, it's the
I'm
concern
not
you
going
see.
there again. I'm not
Yeah,
going
I
there
know.
again.
Better short them. They're just going to keep doing the easy, smart things instead of becoming a semiconductor company or some damn thing. If you believe that people are going to go to stores at all, Target at still 15 times earnings is pretty good. And they turned in the quarter that you want. I don't want them to be piling up EPS in Q2 and Q3. They've got a lot of stuff they can do. And what I see when I go into stores is better traffic, better organization, new product, and a lot of ways that they can still improve, without really doing things. They're hiring from the outside, which is great. That's also what you want to see. You need a little blood in there. So a new CEO can take that stock to 200, and you're still really not that expensive. And in a world where kind of, yeah, Walmart can outspend them and they can deliver in 3 hours and they can do a lot of stuff Target can't, people still go to stores. It's just go to a mall. You'll see people there. They're not all just crazy homeless people. They want to be at the mall. It's so these are companies that just have some room to run. They might not be the exciting rocket ships. They might not get your wife off your back when she says, "Why don't we own Intel? That seems like we should have bought that." But it's probably should have, honey. But we're gonna do okay on what we have.
So, by the way, I do have to admit, I did when I was looking for more consumer exposure for this oil hedge. I did circle back at Kevin Plank's 6 feet Under Armour, and I just couldn't do it. So I'm sorry. I looked
No,
at
and
I looked at Abercrombie's valuation, and I said they're far better than Under Armour on executing. They have a much better balance sheet, and if they traded at the same EV to sales ratio, I think I figured Abercrombie would be like 105, and I was buying it at 75. So I
right.
just go there, right? For some reason, it has this enterprise value to revenue and potential earnings power that always seems, too high for its potential and its turnaround recovery. So I don't get it.
Hi, I'm David Maris. If you like what you just heard, we've tracked every single pick we make on the show, every ticker, every thesis, every entry price, over 1,100 picks and counting. We put it together in a free report with our top 10 performers, the reasoning behind each one, and a preview of our full dashboard. If you want access, the link is in the description.